Hello friends, thanks for joining me again. This week I asked a question. On this chart, will price move higher, lower or sideways? Now, if you want to pause the video and study the price and volume for a little while and apply the principles we talk about on this channel and see if you can work out which way price is likely to move, higher, lower or sideways, because I'm going to run through the chart before I show the result, and as I work my way through, hopefully you realise what the answer will be. So you can see down here that price was rising and then increased volume came in and price accelerated higher, then went through a period of consolidation before accelerating higher again. Price then gapped higher here and really pushed up on very high volume. The close, however, was mid-bar. And the next day, price pushed higher again. It didn't exceed the previous day's high, and volume was even higher. Spread narrowed quite a bit. It closed more positively though. Price came back on reduced volume. And then after a couple of days, price pushed higher again. You can see that down here, there was actually 2 days of increased volume. So price has made an effort to push higher again, and it's come up to the close here that I've marked. Price came back on reduced volume and then spent 2 days where price pushed higher on increased volume again down here, but it still didn't exceed this line that I've marked. And then down here you can see that volumes have declined over a period of time here. Price didn't come back very much though. We'll mark this as the ice lines. This is a zone here where if price breaks through, you'd be a little concerned. And this is now the breakout line above as price trades sideways. What it's trying to do is consolidate in response to this widespread up bar that closed mid-bar. Now, you can see that price has made a few attempts to push higher on increased volume. All the blue bars down the bottom here are the volumes for up bars that closed higher than the previous bar. And volume can be considered as activity, but also force or effort. So it's made an effort to push higher, but price hasn't pushed higher on all those bars. Then there's been a little consolidation down to this point here. You can see here price made another attempt to push higher, and volume was increased down here. The next bar was a test bar that had even higher volume. There was a secondary test and showed no supply, but the up bar in response didn't close above the test bar, which was here, and volume was only average. Then there was a shakeout on increased volume. And 3 days later, there was another attempt to push higher on quite good volume again. That's another big effort by the market, but it still didn't challenge this breakout line. Then there was declining volumes for a period. Then this bar on increased volume again, it closed poorly, sort of like an upthrust. And the bar in response did close higher, but volume suggests it was on no demand. Now, I would suggest whenever price gaps up like this, especially after price has been in a good uptrend and it closes poorly and the next bar has even higher volume but spread narrows considerably and price doesn't exceed that high and then pulls back in response and doesn't continue higher, that this was supply coming into the market. And this is some form of distribution zone. Now, all of these bars that attempted to push higher that I marked before should at some point have absorbed the supply and continued higher. But these were bars that were actually selling into the demand in the market, and that was why spreads remained relatively narrow considering the high volumes. There was probably very good news out in the media and in the market on social media sites, and any demand that was coming in was being sold into. Now, the last bar here is some form of test bar. So now, is price going to move higher, lower, or continue sideways? I think you probably know the answer now. It's going to move lower. This was a distribution zone. Whenever you see a gap up on high volume, be very wary. Sometimes it'll be legitimate. A lot of the times it's the beginning of supply. And it takes quite a while for that supply to work through the market. It's rarely going to just continue straight down in response. Sometimes, but rarely. More likely, price will go through a period where it will attempt to consolidate and solidify the gains. But what's actually happening is that whoever began selling up here has probably got a very large line of stock to sell, and they need to continue selling. So they put out good and positive media to try to rustle up as many buyers as possible, and they sell into that demand. Now, I said this was a test at the end, and price in response closed sharply lower as a breakdown bar below the ice line or below the lows of the trading range, and there was two down bars in response, and that's a failed test. And a failed test is a sign of weakness in itself. Then this bar here showed an inability for price to recover back into the trading range, and you can see what happens in response is a cascade lower. It's like a domino effect. The holders were considering they were going to have this price to sell into at the minimum, and price is broken down. That causes more people to sell. When more people sell, price then moves lower in response. And when price moves lower in response, that causes more people to sell. Price breaks down further. You can see each time there's an inability for price to recover back above the breakdown line each time. And the ongoing selling in the market causes price to grind lower. And as price moves lower, people realise they're not going to get the price that they thought, so they'd better sell and get what they can. Price breaks down again. It's unable to recover. You can see it happens over and over. This is the cascade lower, like a domino effect. And this is a common thing to see in the market. You see the market push up strongly, go through a period of selling. In a really strong stock, with really strong fundamentals, you may see this sort of thing happen to an extent, but price successfully consolidates what would have happened in that case is on all of these efforts, one of them would have punched through, and then price would have pushed away in response. But you can see not a single one of these up bars on all of these increased volumes were able to push higher and break out. And as soon as there was a breakdown bar, the gig was up. It was very unlikely price was able to recover back above that line and trade back in this sideways trading range. And then, as we saw, the breakdown continues in some form of domino effect or cascade. Okay, hopefully that was interesting again. Let me know in the comments if it was. Thanks for your time. See ya.